If you are looking at buying a home, the reality is that it's harder to get a home loan right now. The Australian Prudential Regulation Authority, or APRA, says the value of new housing loans approved in the December quarter fell by about 12% compared with the same time in the previous year. So, in our last story in our special financial literacy series, we take a look at what you need to know about getting a loan. The Banking Royal Commission thrust the banks and mortgage brokers into the spotlight, recommending a fee-for-service model, meaning the borrower, not the bank, should pay brokers up front.
I don't expect clients to pay for our service. Many of them won't.
Both sides of government have rejected the idea, although there may be changes in trail commissions, a recurring fee paid by the lender to the broker in future. 60% of all home loans are written by mortgage brokers, and while they are able to compare products and rates across different lenders,
they don't have every loan in the marketplace, and they do only have their approved list.
While banks only sell their own products,
there is an advantage in having all of it in one place, and they have terrific online banking systems.
But lenders are making it harder to get a loan.
They were using an overall measure for expenditure, and the Royal Commission said, not good enough. You have to look at people's individual circumstances.
More in terms of living expenses and looking at some of your spending habits.
Which means prospective borrowers need to be able to demonstrate they can afford to service a loan.
The best way to do it is to have a regular payment, a regular savings program. Every month I put this much away.
First home buyers, as an example, don't have to have a 20% deposit. You can still have a 5% deposit.
While some lenders are offering loans with a small deposit, if it's less than 20%, a borrower will be up for lender's mortgage insurance.
It protects the lender in case you default.
It helps you get the loan, but it's not insurance that you can claim on. Try to avoid it.
A lower deposit can mean a higher mortgage rate depending on the type of loan you take. Principal and interest means your repayments cover the interest charged and reduces your loan over the term of the loan. Interest only covers the interest, usually for a period of 5 to 10 years. Variable rates can change if the costs the lenders incurred to provide the loan, like wholesale costs or the official cash rate set by the Reserve Bank, moves. Fixed rates remain unchanged for an agreed period.
If your loan doesn't have an interest rate starting with a 3, you're paying too much.
Borrowers can approach their bank's mortgage broker or check out rate comparison websites to search for a better deal.